Hi, Larry Gaines, Paracycle Trading. Well, in video one on crude oil, I wanted to show you the beginning of a potential down cycle or downtrend that was developing on crude oil, and a couple of good ways to trade it. First off, to spot the first shift and kind of looking for that trend breakdown, that can offer some great opportunities for the initial trade setups, which usually are going to be the best. And usually you can really have some great day trades going into this, and then also complement it with some swing trades to take advantage of the potential for a bigger downside move. So first off, here's the crude oil futures chart, and it shows you, just based on my trading model, that the momentum is starting to shift to the downside. So it's given a high probability that price will start breaking down versus breaking up. And this is a volatility squeeze, and so looking for trades potentially in the direction of the downside. So then the next step is you can day trade, and you can also add swing trades. So in video one, I showed some day trade setups. So I like to use trend lines, and this is a 512 tick chart. So using my momentum cycles to the downside, break a trend line, you go short, then establish another trend line right here. Momentum goes down, goes short. So these are some really great trade setups to the downside for day trading. Now to take it one step further, then you can add some swing trades to it. And one great way to do that is using options. And let me show you the trade setup that we did on that as well. Now here's a weekly chart of USO. It's an ETF for oil, and you can see it's just been in this very sideways tight channel, sideways price action, and broke here the $19 level, started breaking down on Friday. So based on this shift to the downside, a good way to trade that with the defined risk trade is to use options and do an option spread. So did an option spread on that using the September options, did a 19.15 put spread for $90. So this trade was the buying the 19, selling the 15 put spread out in September. Gives plenty of time. It was $90.90 per contract, and it has potential for some good downside here. So very defined risk, low stress. So let's say it gets down to $17, you can make over $100 or $100 per contract, so that's doubling your money there. So it's a great way to trade a downside move on oil using USO, and with the defined risk, very kind of low cost trade to get into in what I call low stress as well. So hope this helps. And one other thing, I'm doing a free webinar on Wednesday, July 8th, and I'll be going through a lot more on how to use this kind of top-down trading approach. So if you'd like to learn more, join me July the 8th, and use the registration link on this email. Thanks. Have a great 4th of July.